Good morning, everyone. Welcome to the Modern Market, where every day we get into everything to do with the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today. We've got Bitcoin consolidating around 87K after 7 days of consecutive inflows. We've got Berachain proof of liquidity going live with more than $500,000 of active incentives. Very important to dive in there. Got a feeling that's where the next set of DeFi games are going to be taking place. I'll be explaining that. And Trump Media announced his intention to partner with Crypto.com to launch ETFs. The family keep extending their crypto business. We've also got the latest on price action on crypto and NFTs as usual, plus a general thought on what we think is going on in the market. I've got Legendary and Rahim with me on the stage today. We cannot wait to get into it. But just a reminder, friends, before we do, this show is not financial advice. This market is very, very risky and we do not know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Rahim, it's Tuesday. It's the 25th of March. How are you doing? How are things your side?
GM, so far so good. Loki feel a lot more hopeful. The crypto markets are up. NFTs are doing really well. It's always nice to see like the punks having their run up. I was having a look at some of the 6529 memes have been like
Mm,
doing a lot of volume. It's kind of nice to see that. Had like a preliminary chat on the timeline regarding the routine meme coin token, which in my opinion underperformed considering the attention it's getting from Coca-Cola and Mr. Beast. So I
mm.
don't know. It feels like nature is healing, health is good, the bioweather is good, life is good. Not bad.
Sounds excellent. On the NFT side, I've been thinking about this as well. Why do you think? I mean, A, what are you holding these days? I think you're kind of in the bracket as a long-term holder of a lot of collections. What are you holding? What are you liking? And why do you think that all things considered, NFTs have held up pretty nicely here? Why do you think people are kind of returning to that? What do you think's going on?
I feel like if you look at like certain collections, right? Like I think like the two collections I'll put out of this conversation would be doodles and pudgies because they have something speculative coming in the future. But if you look at like Azukis in the last like couple of weeks, or especially if you look at board apes have kind of maintained this floor for the last like 3 months. I would argue like their current floor is like the most organic floor. Like there's no speculation. Anyone who's buying it is not buying it because like they can flip it for like $6,000 in the next 2 days and stuff. So I just feel like it's the right people are buying it. You're seeing so many people kind of upgrade their NFTs. I know. I just feel like the more time is going by, I feel like we are aligning more with the collectible market that works in the traditional world. Like this is
Mm,
how Pokemon work. How Pokemon people, like people who are interested in Pokemon buy cards. Yesterday, I was reading tweets about they've started releasing collections really fast. So some of them were like, yeah, looks like the only the OG ones are gonna hold. The newer ones, they keep printing more cards and stuff. Sounds like exactly what we say. So I know it just feels like we are aligning ourselves more and more with how the Pokemon collectible world is working, and I've been aligning my vision a lot through that lens, for better or for worse.
I like it. I think that makes a lot of sense. I can see why we maybe trend towards that direction, and maybe studying the collectible model and how that business works is a good way to get a sense of how where proper NFTs, or at least the profile picture community ones, will be going, ones that are seen and felt like more to be collectible. um Interesting stuff. We'll touch on NFTs a little bit more later too when we get to the price action. Legendary, what's going on your side before we kick off?
GM doing pretty well. Excited for the show. Excited for specifically the proof of liquidity stuff on Barrow, which we'll get into. And other than that, I'm also excited to pick up the first supplement from my biohacking ordering spree, as well as a bit more than 20 fashion items from the 90cc black box mint that happened a couple of months ago.
Okay.
So there will be some 90cc fashion entering this show in the next couple of days, and I will test some compounds on myself, and we'll also be be reporting on that.
Right, so we're going to have some fashion experimentation in the next week or two, plus some very deep biohacking going on. I like it. This is what happens when we're in this kind of market. But maybe the thing, look, who knows why people listen to the show? Maybe it's for the biohacking, maybe it's for the fashion advice. But as you said as well, our antennas are going off when it comes to Berachain. I think at the moment, proof of liquidity. Look, I know loads of people have been in proof of liquidity stuff already, and the people who are, there's more than $1 billion, I think, still on Berachain. So it's not like we're early to it, but we cover everything. And it just seems like that is somewhere where the DeFi games are happening. And I know that it's happening. Like there's a pocket of attention that's really on top of it. And then there's everyone else who are, still thinking about meme coins because that's the latest hangout, is still just watching what Trump is doing. Maybe focus on Hyperliquid because that was the big thing that took a lot of people's attention. But no, our antennas are going off on Berachain. So we've got a little bit of an explainer coming up on that in today's show. It's not perfect because it's quite a detailed thing, but we want to definitely get people up to speed on that going live yesterday. So that's pretty interesting. So let's get into it, starting with the price action, as always, to get you up to speed with what is going on. There we have, let's get this, make sure we got it loaded live. We have Bitcoin flat at around 87. That's nice, 87K. We've got ETH down 1% to $2,000. No more, no less. XRP is down 1% to 2.4. BNB is at 637. Solana is also flat at $142. On the meme coin side of things, this is what we have. We've got Doge up 5% to 18 cents. We've got Pepe up 4. Trump is actually down 4. Bonk is up a couple. SPX is down 4. Fartcoin is down 5. However, Fartcoin is up 100% in the last 7 days. So some of these really bounced big. The biggest bounces in the last 7 days was Bonk at 30%, SPX at 70%, Fartcoin at 100%. But Pengu was up 10% on the week, just up a couple of percent in the last 24 hours. So some of these stuff have bounced quite big in the last 7 days. Ket was up 35, Popcat is up 30, and then just smaller moves up in the last 24 hours, kind of across the board. Mog is up 6% as well. Getting into the headlines themselves, we have Bitcoin ETF seeing 7 days of consecutive inflows now as price has consolidated around 87K. Remember, Saylor has bought another, how much was it? Let me just check in the rest of the snapshot. Bought another 6,911 Bitcoin yesterday. So he is not slowing down with strategy. Prices consolidating around there. Good news on the ETF inflows. We've got Berachain proof of liquidity going live with more than 500K of active incentives. I'll be breaking down what that actually means in just a little bit. And then finally, Trump Media announces intention to partner with Crypto.com to launch the ETFs. Rahim's going to be explaining what we need to know there and how the Trump not the Trump administration, the Trump's family media business is continuing to expand its empire into crypto more and more. A couple of notable sales. We've said NFTs are going strong. Punks are on a heater. A huge bunch of CryptoPunk sales yesterday. The biggest one was a CryptoPunk hoodie for 115 ETH. Legendary, what else is going on the NFT side that we need to know?
Absolutely. Let's take a look. Ryan mentioned one of the most important things already. Memes by 6529 are up 36% over the last 7 days, up another 30% apparently also over the last 24 hours, and seeing quite a bit of volume, just 75 ETH in the last 24 hours alone. Similar to that, Azukis have had a nice week. They're up almost 12% over the last 7 days. They're also up a couple of percent over the last 24 hours and back at a 2.7 ETH floor. But the major mover, the major winner from the big collections have to be the CryptoPunks. They are back at a 42 ETH floor, which equals 86.5K. So we are pretty much back on track to flip Bitcoin with punks.
Interesting. Very interesting. The CryptoPunk I wanted sold yesterday.
Damn. For you?
It's funny. I had a CryptoPunk also that I wanted that sold day before yesterday, and I was bummed about it. I wonder if it's the same one.
Maybe, to be honest.
Did he have a hat?
No hat.
Again, mine had a hat.
Damn. We'll have to rue that a little bit longer then. Have to figure out how we get one of those. Okay, the rest of the news. There's some interesting stuff here. Movement Network Foundation to launch $38 million USDT buyback of Move tokens after Binance market maker investigation. It seems like Binance found out there's a bunch of, I don't know, either illicit or not proper behavior from a market maker with the Move token, and now they've launched this strategic Move reserve, $38 million that's going to be buying back the token. Some of this market maker stuff is a bit fishy sometimes, but that's what it is. That's the news. I don't have any more details than that. Trump's World Liberty Fire has deployed a stablecoin, USD1, on BNB. That's pretty interesting to note. Strategy bought another 6,911 Bitcoin, as we just mentioned. Circle announced USDC stablecoin support in Japan. I think that people were really pushing for that, or USDC Circle was particularly pushing for that, so that's big news for them. And Kraken reportedly working with Goldman Sachs and JP Morgan on potential $1 billion debt raise to fund expansion. We've spoken a lot on the show the last week or two on how we think there'll be a lot more crypto M&A over the next couple of years, or at least during this administration, so potentially over the next 4 years. And some more news, digital asset trading platform Mintify TGE takes place today. Legendary and myself invested there. We've worked with Mintify over quite some time. Very curious to see how they get along. That's coming out later today. NFT and creator focused L2 Shape also announced their claim for the Shape token. We worked with Shape a few months ago as well. We didn't invest, but we worked with them. That was nice. They're obviously more focused on the artist side, trying to capture kind of different part of the market. So we'll see how that goes. There's no like buttons to click there yet. There are some instructions on how to claim though. Just kind of log in and wait for further instructions. The Nillion TG went live yesterday. That's trading at $800 million. I think it's kind of TGE season coming up as people want to get in now in these relatively better, now that the market hasn't completely crashed, people want to come out now before the summer, I think. So I think we're going to have a busy April. And ArbitreDAO considers proposals to defund the gaming catalyst program backed by 225 million ARB tokens. This was an interesting one because I think we reported on this back when it happened, Ledge, where it was like a humongous fund that was created to stimulate the building and production of and facilitating like the gaming ecosystem there. And it looks like the authors are arguing that the GCP was approved during a period of exceptionally optimistic projections that in hindsight proved unsustainable. It sounds like us with our angel investments, maybe asking for a refund. That's the equivalent of an institution asking for their angel investment refund back. So if they can do it, why can't we sometimes? People were pretty unfair on individuals, I think. But anyway, that's maybe kind of joking, to be honest. But that's the rest of the news. What is catching your attention, Legendary, before we get into the main stuff?
To be honest, everything. Kind of want to comment on everything real quick.
There's a lot going on, right? And did you see my tweet yesterday where I said, or maybe did I delete this tweet because I found it annoying? Yeah, I wrote a tweet which I thought was cool, but then it was like I got self-conscious because it was all about myself. I was like, you know how we talk about different indicators, and going to the gym was an indicator. Buying all these biohacking tools is an indicator. My to-do list is also a great indicator. And yesterday, for the first time again in a while, it got crazy. You specifically know what my to-do list looks like. No one else knows. But I keep a written to-do list on paper. And when it gets busy, like when the market is hot, it's just a complete insane brainstorm. Like it starts off a very structured, like bullet point list of things. And then at some point in time, it just escalates, and then there's bubbles going off in different places and arrows going in all different directions. So it got busy again, got very, very busy again. And I think that's shows. I think April is going to be super, super busy. But sorry, what are you thinking here?
Yeah, no, very much agree with that. Look, on the one hand, the stablecoin thing is not going away. I mean, I feel like we speak about some sort of stablecoin related news on every show now, but Japan's going to be an interesting market. We've seen it from Metaplanet's perspective. We've seen it from the discussions that are going on there to change the taxes on crypto, which have been highly, highly unfavorable. And now that stablecoins also seem to be coming Japan's way, that might be a very, very good kickoff signal for some sort of broader interest going on in Japan. Then to TGE season, it is a bit ironic, isn't it? I feel like we didn't really have that many TGEs at the start of the year. We had founders who were like kind of postponing to see what will be going on when the bull market will peak. Now that we do seem to have a bit of a relief rally, there's these TGEs. There's, I think, a couple more coming this week. Whale had a post on that there's also the, was it Walls, whatever token coming. mints at the same time. Final Bozo is currently that is one of the premier, most hyped collections on Abstract. I think all of us are minting or have been minting that. So it does seem that bit of action, bit of life is coming back, and everyone is like racing to get whatever product they have out there at the moment. And then the other thing I wanted to touch on quickly, I actually agree with what you said with Arbitrum, falling for the FOMO, going in for 9 figures and being like, oh, now we kind of want our money back. And it's interesting that FOMO works at a like quote unquote DAO or institutional level, that you see, oh, Web3 gaming is a hype. Let's deploy hundreds of millions there. AI is coming. Maybe we should do that. And then now that you kind of have this post FOMO clarity and you want to claw back the funds, it says a lot about how we are approaching things in this space, and also kind of combines the discussion that we had yesterday, liquid funds, the liquid lending on Wildcat. And I feel like that we also treat this angel investing stuff a bit more in a liquid way, that they're like, maybe I can have my money back. And there's been also a couple of protocols who did that, right? Who offered refunds and still offering refunds up to 7 days after TGE mostly. So I don't think that this like Web 2 analogy of saying, yeah, but it doesn't work like that in Web 2, hence it's ridiculous to expect refunds in Web 3. I don't think that this is fair, because I feel like so many of the things that we are doing here have this way stronger emphasis on keeping funds liquid. So why should that not apply, at least to a certain degree, to certain forms of investments?
Yeah, I think there's a bunch of good points there. One other thing I wanted to add, you're saying that it's a busy week. I missed this off. Taproot Wizards mint is today, I believe. 0.2 BTC for a beautiful Taproot Wizard. So we'll be watching that with a lot of interest. To your point about the investing thing, look, this is my take on it. I do not think that people should claw back funds or that refunds should be available, save for circumstances where you are sold on a material like clause, whether it's contractual or not. You are sold on a particular thing happening because that's the word that was given to you, and you basically make the investment on the basis of that word. People told you something that induced you to make the investment, and if that thing doesn't happen, I think you are entitled to ask for it back. If they say, you know, this is the thing we're aiming for, it's very difficult, this might not be able to happen, and therefore, you know, we're not trying to induce you into your investment all on the fact that this thing is going to happen in this particular way, then again, you should be aware of that risk. You should be, the team did not induce you to make the investment on that specific thing. But I think if people say things and almost make it a conditional, and that's this specific thing that induced you into the investment, I think you have an argument. That's where your point stands true, Legendary, where you're like, look, we deal with stuff in this space that is not the same as in other industries, like claim sites being open and then the devs deciding to close it down so that other people can sell while the investors like can no longer access their tokens. Just one example of some of the nonsensical things that have happened in this industry. So yeah, I think there's a bit of nuance there. But that's my thought there. Ryan, do you have a take on this? I know you do a bunch of investing yourself, or is there anything else catching your attention? We said there's a bunch of interesting things going on that you want to have a just touch on briefly.
I think like the whole the DAO governance thing piques my interest a lot. Of course, having built something in that direction, I was involved with like Nouns DAO before, GM DAO, and a couple of ecosystems. I think what's interesting to kind of see, I mean, like we can all agree in some ways DAOs as a concept is just like doesn't work. It's like we've struggled with it. It's a very chaotic model. What I like about this back and forth, even with this whole idea of like people rolling back this decision of like maybe we deployed way too much money, let's cut back that. I just think it's nice to have that dialogue in like a very decentralized manner, so that maybe in the future, even when we are comparing like Web2 investments, we can come up with models that maybe like refine us and prevent us like from deploying like mad amount of capital and lose it. Maybe you could do it in like sectors. You're like, okay, maybe the first, I don't know, you have a certain KPI, a certain milestone. Until then you have, let's say, like 50 million tokens and more that. I just feel like at the end of the day, going back to what Legendary was saying, whether it's like DAOs, whether it's like VC funds, I think they're all work on like human psychology level. It's like the same thing. People are deploying on the next meta, hoping that if like even if one game out of the 20 games is successful, I'm gonna like outperform my entire portfolio. But I actually like I know DAOs have like not the best optics. I actually think Arbitrum DAO works in a very good way compared to like a lot of the other ones and stuff. I just like the fact that we're able to have this dialogue in a way more open, decentralized fashion. People are able to vote for us to maybe change some of the processes that we've changed in the past. I fundamentally believe blockchain shouldn't be just about like, it's not just about the money and the financial aspect of it, right? It's also about bringing power back to the people and governance and voting rights and this and that. So I like that we are experimenting this regardless of how it goes.
I like it. Yeah, I think DAOs are a tricky one, and I think they've been found out in many ways over time. But there are people who try to operate it in a slightly better way. But let's see how those go. Okay. Okay. One other thing I wanted to bring up as a quick, interesting point before we get into the main headlines today. This was a pretty interesting report which Paradigm has produced. They released this just a few days ago. It's by the Paradigm policy team. Obviously, Paradigm, very significant investors in the space. They produced a report called TradFi Tomorrow, DeFi and the rise of extensible finance. They did a survey of TradFi professionals, try to get a handle on what they think is most important. And there was actually some surprising results. So I think the disparity or the gap between us on crypto Twitter and TradFi is most noticeable right now in the gap in sentiment. Like crypto Twitter sentiment seems pretty low. Everyone in more corporate America, corporate crypto is super bullish. So there's that huge sentiment gap. And I think maybe understanding what they're thinking about might actually help to see what they are thinking is interesting. If you believe that that is the direction the industry is going in, and there can be questions for that, and you might be slightly disappointed that the industry is going in that direction, but at a minimum, understanding where they're coming from is maybe quite helpful. So I thought I'd bring out a few of the findings of the report. I've got the full article here, which I don't mind sharing my screen for, so I will do that now for people who are watching in. So we've got some information that, so when they were surveyed, they said more than 2/3 of TradFi firms are currently looking at DeFi. Finding 2 was TradFi firms think it's inevitable that DeFi will eventually be critically important to more core businesses. And this is a super interesting one to me, because I think this goes against a lot of the narrative that people tell you about TradFi moving forward. This finding was TradFi rejects the notion that private blockchains are as valuable as public ones. We obviously talked about permissioned pools the other day on Uniswap going live versus unpermissioned pools, and we've spoken about the rise of Converge, which is the chain by Athena, versus something like just on Ethereum mainnet, which is obviously far more permissionless. But what they found, or at least in this survey of 300 companies, they said now our survey data shows that most of the TradFi community believes that public permissionless blockchains are critical for leveraging the benefits of things like smart contracts and tokenization. So it seems like they're actually leaning in that direction, according to this report, at least. So today, TradFi is most interested in stablecoins, tokenized assets, and DEXs. We speak about all of those things a lot. And the biggest headwind preventing DeFi from unlocking real economic efficiencies in the short term is the regulatory environment. Policymakers have generational opportunity to accelerate. So those are the 5 key takeaways. Would be curious, boys, for your anything jumping out to you there that you think is interesting, that explains the discrepancy between our sentiment and their sentiment, or anything that surprised you or that you find interesting. Maybe Rahim first.
Well, I'm definitely surprised by the public and the private and permissionless blockchain consensus. That's very interesting, because I remember us discussing, like you guys spoke about Athena the other day. We've spoken about Sonium, I believe that's how you pronounce it, the Sony private blockchain, and the arguments Vitalik had put across it, where he was like, the whole idea of a decentralized L1 is for people to build however we want, and some of these L2s can be private. It's very fascinating to me to see tradfi companies be open to the permissionless nature and be like, oh no, you know what, we find them way more valuable than private ones. I think that's a pretty interesting difference to me. So I'm definitely going to dig deep into that.
Yeah, I found that one interesting too. Funky, your hand is raised. Welcome to the stage, my friend. What are your thoughts on the nature of this report? Anything catching your attention from Paradigm?
Yeah, I didn't read the report itself, but I caught a very good quick overview thread from Austin King, which I dropped in the comments below. And I quote posted that last night when I caught it. And basically I was saying, coming off the heels of DOS NYC, to the point you just made, B, I cannot think of a point at which the CT sentiment had such a massive yawning gap between what I'm seeing and hearing and being around these big tradfi and institutional level investors. Like, they are so ridiculously bullish. You got to stop. Like, people on who are regular participants, people who are here every single day, need to stop thinking about the next 3 to 5 months and just really focus on where this is going in the next 3 to 5 years. Because they are, like, one of the things I thought that Austin King said really was interesting from the report is that effectively tradfi will be just completely subsumed by DeFi. DeFi will take over for a number of reasons, because it's just much more efficient, especially when you're doing it at scale. These people are talking about just bips and moving things at margin. So where you can eke out that little bit of extra gain, it's going to make a massive difference at scale. So I feel like we're just at the very beginning. I know people always think, like, oh, we're too late. But for the big boys to come into this space, and when that money starts flooding in, that's maybe going to be sort of the lift that the whole industry needs. But I mean, it was just absolutely palpable. 3 days at DOS NYC, just the bullishness, and I'm not surprised by the public blockchain, and here's why. Especially as an infrastructure provider, it's already there. Why recreate the wheel, right? Like, everybody's going to look at Ethereum, for instance, and they want to drag on Ethereum, they want to drag on the price, but to the point we've discussed many times on the show, think about the liveness of the chain, think about how decentralized it is. It is effectively the de facto, economic settlement layer for crypto at this point. Even if you have L2s riding on top, at the end of the day, it's still connecting to ETH, it's still connecting to that consensus mechanism and everything else. So I just feel like there are going to be opportunities in the tech that's going to allow for shielded transactions. We already see a number of these solutions being built right now. So there's probably going to be much like the Zcash model. If you guys have ever messed with Zcash, you can choose when you send a transaction. Do I want to shield this and let people know that I'm sending something between this address and another, or do I want to just make it public? You've always had that option on Zcash. So I think we're going to see same thing, where on public blockchains, you'll have the ability for maybe large transfers for you to shield that somehow. So it's not, you don't want to open up the world to your checkbook and show them what's in your accounts. So I feel like you're going to have that duality on public blockchains. And then for those who really want to build a private blockchain to keep things completely obfuscated, that's still going to happen. But I feel like, why build all the infrastructure all over again if it's already there and if it's already being currently built? But yeah, super, super bullish at Austin West.
Excellent points. And to your point about, it just made me think of why Aerodrome. Remember last week, Aerodrome was up. People were kind of wondering, like, oh, why did Uniswap, sorry, not Uniswap, why did Base build the permissioned pools with Uniswap and not Aerodrome? People thought that was like a slight on Aerodrome, and they kind of tweeted, and I think the founder said, like, you guys can prove that it's a market that's worth doing. We're doing completely great in these permissionless pools. We don't need those at the moment. And I saw a tweet more recently where he said he showed the volumes that was going through in the permission pools, and it's like relatively nothing. So look, it's probably still going to be an increasing market moving forward, still probably going to be worth participating for someone moving forward. But these permissionless pools is where the value is right now, at least. Probably conceptually and practically, like in practice, that is where the majority of the money is made. Ledge, final thoughts on this topic? Curious on what stood out to you from the Paradigm report.
Yeah, a couple of thoughts on that. I think unsurprising to see stablecoins ranking so high. I think the decentralized lending and borrowing, that is so high compared to the yield farming segment, which is ranking like in the bottom 3 or 4. That's very interesting that this is the focus that is being picked up. But then again, if you look at a protocol like Wildcat and see Wintermute in there very, very prominently, it kind of makes sense to see that. The other thing I wanted to comment on is actually something that Overarch said in the comments, saying the space needs more people like Funky. It's a mess thinking, or a CT is a mess thinking NFTs are back after 5% move, LOL. And I feel like this is kind of how the timeline is primed, right? A lot of people from the last cycle obviously came into the space for NFTs, and now that there is a bit of action going on there, that's like the thing that they're focusing on. And you have like the big meme coin excitement, but not a lot of people fundamentally have either deeper technical interest or like this more financial view of where the sector could move. But they came in for the hot topics, and this is what their like main focus of interest still lies in. And whenever that becomes relevant again or has something that is interesting, they talk about that. And that is also like, more helpful to create like sort of easier content when there's a mint, there's something happening, as opposed to like what's the content piece here? Is it I'm gonna put money into Wildcat because I think in 3 to 5 years time maybe Jane's Trade and others will be using that for liquid lending or funding? That's not as hypey or as exciting. It's too long term to make easy content from it. So this is why I feel like that there's like this dissonance on the timeline with those sort of things. Or even the conversation that we are having, like we talked probably 10 plus times about stablecoin market cap is rising. I say probably for the 5th time on this show today only. How do we profit from that? What is the best way? Like we go back and forth and discuss from Coinbase stock to lending protocols to the stablecoin blockchain, which we talked about on the show as well. Is like way more complex, and it's not as tangible as this is minting on abstract. What's the floor price going to be in 48 hours? Is it going up? NFTs are back. Is it going down? NFTs are dead. And yeah, I don't feel like that everyone wants to have this more complex conversation. This is why like often the timeline seems to be biased towards the easier, hypier discussions.
Yeah, I actually think that's okay. I actually think it's okay though. Like I view it as like just a humongous city, and say we might go into the, in London you call it like the city of London. When you go into the city of London, that's like the financial district. That's where a lot of people go. But I've actually walked from one side of London to the other side of London on a particular day, and like you go through like very, very different areas, and some parts are more cultural, some parts are more financialized, some parts are more fancy, some parts are more sophisticated, some parts are more like struggling for whatever reason. And I don't know, I think there's economic activity in each one, and people they do end up specializing, and certain aspects of the business are not for them. We do our best to, like, even having the variety of guests we have on the show, we try to touch on, we'll have someone who can speak to all the different sections, which we'll even show today when we go on and talk about proof of liquidity, for example. But I kind of enjoy all of it. But I take your point, like sometimes when NFTs are not going to be moving, then if you came in for that cultural aspect, which is what you enjoy the most, and the community aspect, then yeah, you're a little bit stranded for a while. But let's keep moving. We've got to get into the headlines. There's 3 important headlines today. Ledge, I think, unless there's anything else you want to conclude on that, what is going on with the Bitcoin ETF? There's been a bunch of consecutive inflows and some other interesting ETP news, I think, as well, which people should know about.
Absolutely. We have A, some breaking news, and B, the main headline. The spot Bitcoin ETFs are seeing 7 green consecutive days inflows, net inflows, that is, on Monday alone, have been very positive at $84 million. If we take a look at the overall chart on CoinGlass, we can see this green streak. I'm sharing that on screen for the last couple of days. And also kind of makes sense. Net inflows are up, price action is up. Even if you look at the bigger picture, going back to last year, you've always seen price moving up when we had these. The price chart is the golden one. When we had this extended green periods of net inflows, which again makes perfect sense, right? There is more demand for BTC, price will go up. And the blog had an article going into some more details on that, into a bit more of an analysis. Just to summarize, the key bit is that a lot of institutional players are very, very positive about these recent infunds. Also say that there's some certainty and coming back into the market. That is only specifically for the Bitcoin ETFs, though. The Ethereum side of things does not look as green yet. There's still more uncertainty on that end, but very positive signs for the demand for Bitcoin. And that connects me to the second piece that I wanted to touch on, and that is actually 30-40 minutes old news, straight off the printer. BlackRock debuting a physical Bitcoin ETF in ETP, exchange rate product in Europe, which is a first off. And they are structuring that very similar to the ETFs with a TR, that's the total expense ratio. It's basically the cost of the ETP of 15 bips, 0.15% at the start, will then be raised to match the others at 0.25% at year end. And the reasoning that BlackRock is providing is pretty interesting. So first of all, they're saying they're seeing massive demand from institutions in Europe, and they don't have a domestic product, which makes sense to have a domestic product. You do want that in many jurisdictions, just from a tax perspective. Yes, obviously, we in Europe can buy the American ETPs, but sometimes or oftentimes there's a bit more structural and tax complexity with it. And then from an institution's perspective, you might have a regulation where you're not allowed to buy that US product, and you will have to buy something domestic. And they are just following this demand. And specifically, BlackRock is saying, with 25 million cryptocurrency investors across Europe, we believe ETPs have an important role to play to build a bridge between crypto and traditional finance through their efficiency and convenience. And just to kind of put that reference frame, or that comparison, the ETP market is substantially smaller in Europe than in the US. Largest product is just housing $1.3 billion in assets under management. Hasn't been that interesting for the big institutions before, but it seems there's a sudden change. And it seems that BlackRock wants to have a piece of that cake and is entering Europe with this product.
Interesting. Excellent summary. I guess that is probably, well, as you say, they probably want a slice of that cake. Sounds pretty positive from that perspective. I don't really have any follow-on thoughts there, to be honest. Rahim, any thoughts on that? I think it's just positive news. Sounds like
it sounds pretty straight up, pretty interesting and stuff. I don't have any thoughts as well. Sounds exciting, I guess.
Then I'll add two more sentences. I said the 1.3 billion, that is the ETP in Europe. Compare that again with the spot Bitcoin ETFs. They're housing 50 billion in assets. And Bitcoin is, so the ETP is domiciled in Switzerland. The Bitcoin is held in cold storage through Coinbase, and the product already has started to trade. So we'll definitely be able to update on how the inflows are going over the next couple of weeks.
Interesting. That'd be interesting to watch. I mean, maybe a final thought is, in general, one of the things I've kind of come to the reluctant conclusion is that everything going on in the States is far more important than what is going on in Europe. Although I would love to be proven wrong, and loads of people have loads of appetite in Europe to participate in the ETP. But that seems to be my general conclusion for a lot of this stuff. Now that I'm far more tied to the markets, and producing content that is tied to the market. So let's see how that goes. Thanks, Ledge. That was an excellent summary to get us up to speed on what that is. Let's get into the Berachain stuff. So this is me going to share with you what I've been researching on Berachain. I definitely appreciate that Berachain is something that a lot of other people have been all over for a long time. I think got exceptionally strong community, but our antennas are definitely going off when it comes to the proof of liquidity. I think it's pretty cool. So this is what it is. This is the news that Berachain proof of liquidity went live yesterday. And Bera was up almost 20% to almost $8 now as a consequence, showing that the market kind of liked what it saw when that went live. Proof of liquidity is interesting because it's created to solve a consensus mechanism incentive misalignment. So this is the problem, and then this is how they're trying to solve it. So for traditional proof of stake blockchains, users have to lock their assets in order to participate in the security model, right? And they earn staking rewards. Think of all of the ETH that has been staked, and and that's just staked. You can't really do anything with it. Of course, you can get the liquid staked tokens where you can do stuff with, but in their opinion, this results in incentive misalignment, as the projects building on those blockchains want activity and volume, and that competes with the native security mechanism of staking, which requires assets to be locked up. Often these newer blockchains have to offer like quite a high rate in order to encourage people to stake. But then if people are encouraged to stake, then who's going to be doing all the activity on the blockchain? So there's that incentive problem that they're trying to fix. So in an efficient market, users are less likely to use the financial applications built on the blockchain if they can earn more with less risk just by staking the official token. So that is the issue. So basically, this is designed to make sure Berachain users are not locking up their liquidity for staking, but can use it by providing TVL. This is roughly how it works. You've got in the traditional system, you've got the rewards primarily going to validators for securing the network, whereas proof of liquidity channels block rewards in the form of BGT, which is Berachain's governance token, to fuel ecosystem activity. So validators direct these rewards to reward vaults, which are smart contracts where users deposit liquidity or engage with apps, incentivizing economic participation over passive staking. So this shift prioritizes liquidity provision and application growth alongside network security. So there's actually 3 tokens in the Berachain ecosystem, because you're thinking probably like, okay, well, there's Bera, that's like the main one, right? What about BGT? So proof of liquidity has these 3 tokens. There's Bera, which is the gas token used for transaction fees and validator staking. So that's the one that, you know, if you got airdrop something, you got some Bera. BGT is a non-transferable soul-bound governance token earned by liquidity providers and delegated to validators to influence reward distribution. And then you've got Honey, which is a native stablecoin facilitating DeFi activities. With proof of liquidity live, users can now earn BGT by providing liquidity to approved vaults, delegate it to validators, and indirectly shape the network's economic direction. So I appreciate that's probably very complicated. I think that's the headline bit of information you need to understand of the problem it's trying to solve, how they're trying to do that. And then the rest of the learning, I think you need to do in practice. That's what I'm going to be doing. Like, I understand it now conceptually. I now want to play around with it. And the reason why I think you want to play around with it is that this is where the crazy APRs and the interesting DeFi games are taking place, like right now. And in the initial rollout, it included 37 reward vaults that went live across various apps like Bex, Kodiak, and Berachain. They focus on key liquidity pools like Bera, Honey, and major stablecoins, and allow users to earn BGT rewards for activities, you know, usual stuff like swapping, staking, or providing liquidity. So I think this is very interesting. That is the TLDR. I do think it requires further investigation, even on our part, plus on everyone's part, if you're going to really understand this mechanic and what they're trying to achieve. I think that's a helpful starting point from which people can go off and do their own stuff. And, you know, if we do some more on it, which I will be looking into, we'll obviously share that as we learn more. So I'm going to stop there. Ledge, instinctive thoughts, questions, concerns, reactions. What are you thinking about proof of liquidity on Berachain?
First of all, checking, can you still hear me?
Yes, I can.
Okay, my screen is completely frozen, so I can't see anything, but apparently my audio is working, and
your audio and your video is actually working.
Great. It's weird because I'm staring at a black screen. Wonderful, but I can hear you. Look, I think it's super interesting. Definitely wonderful explanation. I see that misalignment of incentives that has been going on, and I see what they are trying to solve with proof of liquidity. I feel like it's hard to assess how sustainable that is as a model, because I need more in-depth understanding for that. I think it's also going to be interesting to see the competition between those reward vaults. There's, at least in the thread mentioned, 37 of them. Generally, very, very interesting concept. as you said, needs more research. And I think it's something we definitely should come back and report more on. I want to try it myself. And I cannot yet answer how sustainable this is as a model, or if this needs more economic adjustments in the future.
I appreciate you not asking me for further detailed questions, because to be honest, I don't know the answer, because that's the headline understanding of the amount that I'm able to learn just by reading. But I do think the rest of the learning takes place by doing, as you kind of alluded to just now as well. I need to go away and do some stuff. And then it kind of figures it out. I always find in this space, that is how you fill in your understanding. You learn by doing. And then the words that are written about it start to make more sense. So I think it's super interesting. We're going to take a look more into it, and we'll report back as we see more. Rahim, any instinctive reactions there, or do you want to take it into the next headline?
I think it sounds super interesting. It's taking a different, it's almost turning your favorite lazy farm into like a slightly different direction. So I definitely think it's like I understand like the problem they're trying to solve seems like a logical problem to solve. I just think I'm interested to see that like all these people who like to like lazy farm, of how much are they like really incentivized to go to like use these products out. And I guess it's like an experiment, and I think it's a fantastic experiment. I like how in some ways, I guess this is on like a zoomed out broader perspective of how you have like cryptos become so diverse. You have like such an intricate system created with like 3 tokens, which is probably going to only attract like DeFi people. And then you have like a lot of like consumer chains that are completely like simplified. Like I love the fact that we are at this inflection point in our industry that we are building separate products. I kind of like that. So I like the experiment. Like, let's all get geeky and technical about it.
I really like it. I really like that they're just going so hard at DeFi, specifically in these type of kind of games that you can play. It creates a niche, and it creates a niche for them, right? It creates a niche for them in a sea of different chains that are trying to attract TVL, attract users. You certainly can't doubt that Berachain have got a community and have really managed to attract the TVL in a strong way. So, as I said, we'll report on that more as we go through. I hope that was a helpful intro to that topic, and we'll explore it more as necessary. Rahim, take us into the final headline for today then. Kind of an interesting one. Curious, I haven't read this article yet, so I'm waiting on you to fill in the gaps for me. What's going on with Trump Media?
So Trump Media, like they've been going obviously insane on the crypto side of things. This is not the first time they've been like diving deep onto the volume side of crypto. We obviously have talked about World Liberty Finance a couple of times. They announced a partnership with Crypto.com, which I thought was fascinating considering it's a company that came out of Singapore. So I'm surprised he didn't go like full America on it. But they've announced that they're going to be a custodian and backend tech partners for a lot of the ETFs and ETPs that the Trump Media company is going to launch. I think a good way to understand, because I was explaining this to someone like last week, I think if you want to just understand the difference between ETFs and ETPs, think of it like a big supermarket. So big supermarket, you have different things. You have fruits and vegetables, you have candies. They are like your ETPs, and then ETFs would be like your chocolate aisle. Just using this as an example because I was explaining to someone. So they're obviously diving heavily into that. They've announced their partnership. They've also actually, so they haven't done official comms about it, but I remember CZ tweeting about it, that they've deployed a USD1 stable coin on BNB and Ethereum. Again, they haven't done official comms around it, but seems like, just going back to the Paradigm article, they're essentially going down the same route as everyone, which is understanding that volume is the biggest form of like revenue generating ecosystem in crypto. This is why World Liberty Finance, you're borrowing and lending against crypto. Now they're doing stable coins. They obviously announced ETPs and ETFs, which again, they make a commission for doing the custodian services and an interest on actually providing those services. So yeah, like this isn't obviously like they've dived into meme coins at this point. They have NFTs. They have NFTs on ordinals. They are borrowing and lending. They have stable coins. It's not crazy to think, and I know this is going to sound stupid, but I think it's not crazy to think that at some point they'll be like, they want to launch their own like L2. It's called like the Trump chain or like the America chain. As crazy as it sounds, at this point, I'm like, what crypto product have they not dived into, and what prevents them from going into?
You know what? It's such a fair take. Like they've touched everything else, right? Like literally, they've touched every chain. They've got ordinals, they've got NFTs, they've got yeah,
They have
like
meme
they've
token, they have a DeFi protocol, they have
got
now
stable coin
ETFs.
if you want to, yeah. Yeah, it's certainly not a crazy thing now. You can't really be accused of being crazy for making a suggestion about how that administration or that team may enter into crypto, because they've done all the other things that no one would have necessarily thought would have been on the table. So certainly not out of the realms of possibility. One additional thing I just wanted to add in terms of context. This is the same crypto.com, which so when they made this announcement yesterday, Zach XBT came in and replied to say, Crow is no different from a scam. Because remember, we reported on this the other day. They're doing this thing where they had burned a bunch of Crow tokens a long time ago, but they're trying to recreate them. They just want to reissue them. So your team just reissued 70 billion Crow a week ago that was previously burned forever in 2021, and that was 70% of the total supply. And they went against the community wishes, as you control the majority of the supply. So I think they did a vote on this, and I can't remember if the vote was leaning yes or leaning no, but the point is they basically own all the supply anyway, so they were able to tilt it in the direction they wanted. They said, Zach said, unsure why Truth would choose a partnership with your exchange over Coinbase, Kraken, Gemini, etc. after this move by your team. So yes, this is not, I mean, so that's specifically on crypto.com side.
The token
Pretty,
did go up after the announcement. CRO was up. The DJT stock was up by I think like 8 to 9%. So it is like fascinating that the market for some reason found this like bullish, like regardless. But I just find it so interesting that they ended up picking crypto.com over like Coinbase or any of these, like especially the fact that they're not like American-based exchanges. I just found that like very fascinating.
yeah,
Makes no sense.
it's a fair point. eBrink in the YouTube comment saying it's because crypto.com specializes in crime. It has been crime season in general. I thought we were moving out of it. I don't know if this necessarily is attached to that. However, it doesn't feel good, right? And I think that was the general point about the Trump conglomerate, or like whichever entities they're doing things with, because they're obviously various ones. It's left a bit of a bad taste in crypto's general sentiment, the way that it's kind of expanding its tentacles across the whole ecosystem, and setting itself up to profit in different ways as a consequence of the the improving regulatory situation as time goes on. Ledge, want to check in with you here. Can see you, can hear you. I think any final take on the crypto.com potential? So just one clarification as well. This is a non-binding agreement to partner with crypto.com. That means that it may not happen, but that's obviously the intention. Any final thought on that before we close out?
I do, and I see you guys again, which is wonderful. And nobody reads that in between the lines. Is it binding? Is it non-binding? As Rahim said, if we take a look at the Kronos, formerly Crow price, that token is up 30% over the last 7 days. Obviously, the majority of that, 25% over the last day. So that went from 8 cents to almost 11, and kind of has corrected to 10 cents now. Yeah, the interesting thing is, as you both have said, it is for a bunch of Made in America investments. They do partner up with crypto.com instead of Coinbase, instead of Kraken, Gemini, or all the other potential partners. There will be an incentive in the background, let's put it like this, which has helped to come to this decision, I would argue.
Yes. Always just follow the money in the end. Follow the money, follow the incentives. That probably reveals all. So until we know what those incentives are, it's hard to comment. But assuming that there are some incentives somewhere to make these kind of deals get over the line. Nevertheless, that is our show for the day. Hope you enjoyed it as usual. Thanks as always to Legendary and Rahim for joining me on the stage. Funky for his contributions as always. And thank you to everyone for joining. We do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour on X Video, YouTube, Apple, and Spotify podcast too. Have a wonderful day. Take care. And we will see you again tomorrow. Bye-bye.